Good morning, traders. Today is Monday, the 7th of June, 2021. My name is Neville, market analyst with YouTrading. And today I'm joined by
Joel Frank, also market analyst at YouTrading.
How are you doing, Joel?
I'm good, man. I'm good. I'm enjoying the weather. I think we were talking about this last week, but it makes life so much better, doesn't it, when the weather turns nice?
Yeah, I've had 2 barbecues in a matter of weeks, so it's all good.
Oh, yeah, it's all good.
Down here is loads of sea mist at the moment, so.
Oh, that's the problem with the coast, isn't it?
Yeah, rubbish.
Yeah, you need to come into London, be in that basin that's kind of like protective.
Yeah, down in the old concrete jungle.
Exactly. It gets hot.
Yeah. Talk about hot and spicy. Last Friday, we had the NFP. What's your take on that?
I think my take is that it's kind of, this is what I think a lot of people in the market say, it's kind of like a Goldilocks type number. So what was the exact number? It was 536K jobs added on the month. Or it was slightly below expectations for 650K.
Yeah, it was under that.
But not as bad as last month, which was like a huge miss on expectations.
Mm-hmm.
So whilst it doesn't deliver a huge dent to confidence about the US recovery, because it was still an okay number, it wasn't too strong that it really triggered fears of the Fed feeling as though they really need to start tapering their asset purchase program or pivoting towards tapering. Yeah. So I think, you can kind of see that is how the market felt about that number with the reaction in like the stock market, to be honest. Like stocks kind of, they weren't loving life, but they're still hanging out close to all-time high levels. Mm-hmm. And other than that, there wasn't really a massive reaction to it.
No, it seems to have been across the board in the old equity markets. The risk on trade was definitely, like the German DAX was at all-time highs. I was talking about US. Yeah, but in terms of like just everything went up on that day, didn't it? So with the even the S&P 500 just under all-time highs again, and continuing to stay near those levels at present. So
So
what do you think the markets now? We've got the better than the previous month's data, but under expectations. What do you think's the next sort of big news event this week to try and get this market really moving?
Well, in terms of this week, like we do have a few interesting data points out of the US. Like the main one is CPI, which is on Thursday. And that should be pretty hot. Like I think the core CPI is forecast at 3.4%, which I believe is like the highest monthly like year-on-year rate of inflation that the market has been expecting in like nearly 30 years.
Oh, wow.
But markets very much still buying into this inflation is transitory story. So I think for now, the market sensitivity to higher inflation is pretty low, if you know what I mean. Like market's much more sensitive to labor market data than inflation data. It'll be like as summer comes to an end, if inflation stays really high, that'll be when everyone starts going, the Fed have messed this up and got it wrong about transitory inflation. Potentially that could be the thing that people start thinking if inflation it stays really high.
Yeah, my understanding is that they want almost 12 months of above 2%. Is that correct?
Yeah. Oh, yeah. You mean as part of their average inflation?
Yeah, so like their average. Yeah. So as long as the average hits 2 over a year, then they'll then consider. But just looking at the last 12 months, the highest it was pre-April, as that figure was 1.7. So for 11 months it was 1.7 or below. Mm-hmm. And I don't think that 3% CPI sort of pushes the average up above 2% yet. So, I'll do the calculation later, but it's still not quite there.
Yeah, I mean, I think in a perfect world for the Fed, like, even though, like you say, they do want to see inflation above their 2% target for a time, I think where it currently is does make them feel a bit uncomfortable. But I think they're taking solace in the fact that they think inflation is so high because of temporary things which are going to subside. Yeah. Which I think most market participants kind of agree with for now. Otherwise, I don't know. Bond yields would probably be higher, wouldn't they? Because like, if you look at the 10-year, it's like where is 10-year right now? It must be close to 1.6 still.
Hang on,
We should have a quick check.
But I was looking on the news
below
today,
1.6.
Yeah, and Janet Yellen was saying that the $4 trillion, spending plan that Biden is trying to come up with, would be a little bit inflationary, and probably wouldn't be that much of a problem if it did, create a little bit more inflation as well. So I think the Treasury is kind of still looking for a little bit more of, the US 10-year is 1.579.
Yeah. Like if markets were really scared that inflation was going to be higher than the Fed thinks, then I think that number would be higher.
Yeah. I think like the T-bills were like at 0 at some point. Yeah, I think the T-bills, like the shortest term treasuries, they're pretty much at 0, and looking like they're going to go negative at some point. So, even with like 28 trillions worth of debt or whatever it is that the US seem to be carrying, that seems to be putting pressure on the short end of the curve as well.
Well, I mean, when you got the Fed buying as much as they are, they're buying they're buying 80 billion in treasuries a month, and 40 billion in mortgage-backed securities a month. So,
yeah, exactly.
Like they are pumping.
So it's in terms of yields, doesn't look like they're going to reflect too much inflation at the moment.
No.
So CPI, and then what else do you think?
I mean, in terms of, whilst we're just on the US, I was saying a second ago before we start the podcast, but University of Michigan preliminary consumer sentiment data for this month, I believe, for the month of June. Yeah, no, it will be. That'll be interesting. It's always a good early insight into how consumers feeling, and the consumer sentiment last month took a little bit of a knock because of inflation fears. So that's kind of a bit of an interesting development. I mean,
because that was rising, into the sort of April print, and then dropped again quite rapidly in the May.
Yeah. I mean, I guess consumers are a bit more reactive. So, like, as we see this transitory inflation spike, consumers go, a little bit. But then I think the thinking is when inflation does kind of subside, if it does, then consumers will, chill out a bit more about inflation. But
I guess still,
it's all different pieces of the same.
If they had like stimulus checks and all that type of thing, and they thought that prices of their goods were going to go up in the future, they were going to go and spend that money straight away, weren't they? Not so much now. So going back to the calendar, we've got ECB as well. How do you feel about ECB?
I mean, it should be an interesting one. Like, we get updated economic projections. Although I don't think any big changes are expected to that, but it's always interesting to see where the central bank's at. It's been an interesting couple of weeks because markets were kind of building up expectations that the ECB would reduce the pace of their monthly asset purchases, which they accelerated it last quarter. But now we had some dovish ECB speak in the last couple of weeks, didn't we?
Yep, I think they're going to keep the pep going for a bit longer.
Exactly. How much is this going to affect the market? Probably not that much. I think that's what everyone's expecting at this point. If they did surprise us with reducing the rate of PEP purchases, then obviously that would be euro positive, maybe a bit of a negative for European stocks, but I don't think it would have too much of a long-term impact.
Yeah, I was just looking at I'm just going to share my screen. So in terms of like the stocks.
Yeah.
Like I said, German DAX is way up there and just turned green. So that looks like it's going to be bullish for the day. But last week I was sort of saying how we'd had Euro weekly higher lows for several weeks. And then as soon as I wrote that, basically, the next day it came like crashing down. But we had that, we had the reversal pretty much on Friday, so it's all good. And we took out half of that sort of down candle. But it does seem like the euro's waiting for something. And I'm thinking it's a dollar type of move, but because the dollar's come back into this range that we were talking about before. Yeah. So, and obviously the euro and the dollar index are highly correlated. But it's
Yeah.
It feels like another wait and see. That's what kind of why I was asking, like, what you think might be the sort of key catalyst? Because we had Friday's number, and the market reacted positively, but it kind of just went back into old territory. We didn't find new ground, did we? So
it did. Yeah, it was nothing. I mean, sadly, if you're a euro dollar trader or a Dixie trader, last Friday's number didn't really change the dial. Like, if you know what I mean, didn't really change the narrative. What would have changed the narrative would have been a really bad number, which would have been, I mean, I don't know. Like, we were debating this last week, actually.
Yeah, I think because I said like 400, didn't I? Or did I say 500?
Well, no, I just mean in terms of the way the dollar would have reacted to a bad number.
Yeah.
I thought it would react negatively because it would have dovish implications for the Fed. But then you were talking about safe haven bid, which is a fair point. But yeah, we didn't get a really bad number and we didn't get a really good number. We just got a bit of a meh number. So
yeah, but with the ADP number, which was like quite extraordinary, we got dollar bullishness.
Yeah.
And then, that's slightly underwhelming NFP. If it be, what do you think would have happened if it had been 1 million? Do you think they would have just carried on with the dollar rise?
I think dollar probably would have moved back. Dixie probably would be about 91 right now if it had been 1 million. Yeah.
Because dollar yen as well. I was trying to go long the dollar yen last week, and then luckily got to break even before it reversed. But because that was kind of a full bearish reversal. So that was kind of interesting in terms of the yen might catch a bid somehow. I don't know. Crude, that was going higher because the dollar came lower. And gold, what do you think about the gold market at the moment? Have you got any, because you were writing about it a couple of weeks ago, weren't you?
Yeah, I mean, gold, it had a bit of a pullback sort of towards the end of last week. I think that was mostly to do with profit taking, because I mean, if you look at that chart, it's just been going higher and higher and higher, and then you can see it's still, technically speaking, it's still like supported on this trend line. I think the outlook for gold, so long as the Fed doesn't surprise us with wanting to pivot towards tightening its monetary policy earlier than expected, I think the outlook for gold remains positive.
Yeah.
But how much more of this run to the upside can we get? I think the target was, that January high around 1950.
Mm-hmm. Yeah.
That's kind of the sort of medium-term target, I would say, that I think a lot of people are hoping that it will test eventually.
So in terms of why you'd buy gold, is that the same reason why a trader might buy the yen rather than sell the yen? Or is that because a lot of the times the safe haven sort of trade is go to the yen, go to gold, go to the Swissy, that type of thing?
Yeah, I think it's a lot of the same reasons why. Because, like, for instance, like gold and yen both respond positively when US bond yields are like subdued. And obviously when the dollar is subdued as well, both of them tend to do well.
Yeah.
So yeah, I think that's probably true.
So yeah, we'll keep an eye on the yields for both of those trades as well then.
Yeah, 100%.
In terms of sentiment, for the last few weeks, I've had the dollar yen, pound yen, euro yen, and the traders on Active Trader platform have been buying the yen for like a long time now. And I thought they were wrong as the dollar yen was going higher, but they might actually be right this time. So well, I mean, because but if you look at it, dollar yen is quite elevated. So maybe this is it's like a bargain trade to get some yen at current levels. Yeah, maybe against the dollar. Is there anything else you want to look at?
I think that we pretty much covered all of it. Like, we talked about crude, didn't we?
Yeah.
Yeah, I think that's pretty much everything, man. Unless you think there's anything else.
I mean, I was only going to think about the dollar versus the yuan, but in terms of, we had some news out today, which wasn't particularly good for China, but even that hasn't really done a lot in terms of move the chart. So I think traders are still waiting for dollar CPI. So which means this week could be a really boring week up until Thursday.
Definitely. Like Monday, like today and tomorrow, like, oh God, it's going to be awful.
Yeah. Okay. So.
And then like we were saying, even if things like there's a possibility things might spice up, but it's like, even if inflation does come in hot, it's going to have to be really, really a really high number to really get people worrying. You know what I mean? Because
so like, do you think like the number that we had last week for the NFP, do you think if we had that a few times, that type of figure, not the millions, but just like the 500s to 600s, thousands plus say 3% CPI for a couple of months, do you think that's enough? Because they're obviously targeting employment and inflation at the same time. They want to see both of them rising, don't they? But do you think that, or do you think it needs to be like a million sort of new jobs just to get things going?
Well, I think a couple of months ago, do you remember markets were kind of expecting that it would be a million. It's now looking like that's not going to be the case. I think the most likely thing is it's going to keep being 500,000 in terms of like jobs added each month. And, you know, it's like there are things still holding the labour market back. There's still things holding people back from getting employment. Obviously, one of the big ones is the unemployment benefits, which are a better pay than what a lot of people get in their actual jobs. So why would you go back to work if you're getting paid better to stay at home?
Yeah, but then there is that sort of consensus along a certain set of, you know, the states who are going to like remove that sort of stimulus. So I think like a couple of states are removing it in June. So potentially we could see some acceleration because people will actually be needing to go back to work. I think it's most likely we're going to continue to see like what we've been seeing, 500,000. And, you know, that's going to, the Fed, it's going to be a slower progress towards full employment. And perhaps the Fed will signal that they might taper at the start of next year, which is, I think, a good scenario for markets. Like I think the worry was that the Fed would be rushing in to taper in Q3 of this year or something like that, which would be a bit soon, I think. Yeah, because that's what I was thinking. Like, because if you think, well, if I agree with you, so we both think at the same time, that it's not going to be a million like jobs, and with the 3% inflation, I think the employment's going to be dragging behind. So I think personally, the Fed aren't going to do anything, which means I don't imagine the European Union or the Bank of England doing anything either. I think everyone's going to still wait for America to start their process of tapering and rate hikes and things like that.
Yeah, I mean, ECB are definitely going to be behind the Fed. Like, it's like a law of nature. ECB behind the Fed.
I think the same for like the Bank of England as well at the moment, because from what I can gather, there's since Brexit and COVID and all that's, we've had a real exodus of people, and there's not enough people in the coffee shops, even if they were to reopen, to be employed. So I think there's going to have to be some sort of stimulative measures still from the Bank of England.
Yeah, I think you're right. I think they're definitely in terms of, well, actually, to be fair, with their QE, they kind of are tapering it already. So I guess maybe you could say the Bank of England is a little bit less, not more hawkish, but less dovish on that side of policy. But like you say, in terms of rate hikes, I think they're going to be well behind the Fed as well.
Yeah, okay.
There just hasn't been as much stimulus here, as there. That's the other thing. There hasn't been as much stimulus.
Yeah, I didn't get any. Did you?
No, I got nothing. Nothing.
I think if we'd got some, then there'd have been plenty of stimulus flying around. But
but we didn't.
No. That's the point. How is our great British pound holding up? Let's have a look.
It's holding up all right.
Yeah.
Still in the above 140. Yeah. Comfortably.
And at previous resistance, previous support. So I guess we're just like the euro, we're waiting for the dollar to drop like a rock to see if we can get some pound movement. We might be stuck at 1.41.
Speaking of the pound, actually, we do have some interesting data out. We've got April GDP on Friday.
Okay.
And some other hard data as well, like industrial production and, the stuff that usually comes out in that GDP data dump. So it'll be like trade, and various different components of like the economy, like services production, industrial production, manufacturing production.
Yeah.
But anyway, yeah, April should be a strong month because that's when the big steps towards unlocking started. Like, was it April 12th when there was a big easing of the lockdown, wasn't it? They allowed non-essential retail to reopen and stuff.
Yeah. Not that I've actually been to the shops yet. So,
have you not? Oh, mate, get involved in the economic recovery.
No, I've been institutionalized to Amazon orders and stuff like that.
True.
Just like, it's so bad. Like it's I really do need
it's
to.
It's just so easy, isn't it?
Yeah, exactly. It's too easy. All right. Okay. So,
but that should be interesting for the pound, definitely.
All right. Cool. So, yeah. Okay. We'll keep an eye on that. All right. Fingers crossed. We get some movement towards the end of the week, and I guess if you're going to trade, don't lose any money in the chop next couple of days.
Yeah,
and I'll catch you next week.
Yeah, mate. Nice one. Have a good one.
Yeah, cool.
Speak soon.
Yeah, definitely.